excited the whole year because between Christmas and New Year, and to march in the parade and play their drums. And they didn't go right up until the time plus left where they were going to get to go or not. They finally cleared it and said, go ahead. Okay. But they got all the parents in and they said, if you're going to have testing along the way. And they said, if your child tests positive, you have to come get them. Because that's not the part of the chaperone. Babies. And you can't, if you come to get them, you can't take them home in public transportation. You got to drive them and drive back. And she had, my daughter said they had 3 kids testing positive. They were down there for 3 days. And she said, almost coming back, we all got on the bus. And she said there was no testing from them until we got all the way to the next thing. Halfway and have somebody come up. Yeah. So she said, either she or her granddaughter came down with the test when she got home in a couple of 2 or 3 days. But she said they had, she knew of 5 other kids. And one of the Japanese also. It was well run and well done. Oh yeah. Oh, my friend, he's a real folks. Everyone. My eldest daughter. Well, I've had 1 out of 4. My grandson in New Hampshire came down with us. The new one, it lasted. He was in quarantine for about 5 days. Talked to him. And his feel good. What happened with COVID? I got over it. He said, matter of fact, he said, they're getting all that snow now that's coming up. Right. And he's a skier. And his homeschool group has a group of skiers that every Thursday they take off and go north an hour into the ski slope. Ski all day, and that's So we got a lot of great snow. We'll be back up there again this week. Well, my youngest daughter is from Cincinnati, Traverse City, Michigan. And they're learning all that they lived in Western Wisconsin. And she went to Michigan Tech, so she's familiar with it. Yeah.
Hey, how's it going?
They're learning all
Oh,
yeah. It doesn't matter very much. North, northwest, or west. I was on the rock all the time. Because there wasn't a whole lot of people doing it in the neighborhood. Like last week, we got fire that thing up. They for the lowest part of the street. All the time I ever got stuck with it, I hit a snow deeper than I thought, and I ended up sitting on top of it. You know, that flat bottom of the beach, that front wheel hanging over one end, and the back wheel hanging over the other. You have to push the car off the shoulder.
That's right. That's right. He's the time clock.
Yeah.
You saw you're visiting Dave Rotary, and he's getting the meal right now. Awesome, thank you.
Good to go?
All right, good afternoon. Welcome to Beavercreek Rotary. I'm your president and host, Stephen Brown. I'd like to thank our greeters, Amanda and David Hayes, Eric Marcus, our ticket master, of course, Mike Switt, Pete Bales, and Mark Weinstein for our great programs. Jim Gundel and Alex O'Hara for our YouTube and website, and Pete Landrum, our Zoom guy. I'd like to invite Jim Rudd up for the invocation. Or Denny Jarvie, sorry.
The other Jim brother.
You guys can come up together if you'd like.
Would you please join me in prayer? Almighty God, we invoke a blessing upon this occasion of Rotary Fellowship. Make us aware of the deeper significance of our meeting as we develop our friendships as a source of Rotary service radiating from this community to the wider community beyond. Amen.
Thank you very much. Secretary's report, David Cusack.
We have a visiting Rotarian from the Dayton Club, Adam Horstman.
Hi, Adam.
I'm going to let our speaker introduce guests when you come up, if that's okay with you, Barry. I will assume that's okay. All right. And who else has guests? Fleming has guests.
I do. I have my wife Celia.
Dr. Stewart has guests.
My friend Bob Berger.
Oh, wow.
We have attendance of 58.9%.
All right, thank you. We do have Bob Coche online and Beth Capelli and Eric Marcus, so count Eric twice today. Sergeant at Arms, David Fleming. Remember, this is being recorded, so let's keep it clean.
Keep it clean. I know Barry's missed me. He used to be one of my favorite members. Okay, so in keeping with the program theme for today, I won't give general news or sports news. Not very good sports news. We're not going to talk about keeping program theme. I'll just do financial news. Of course, most of us have no idea what that means. Stocks making the biggest moves midday. Marriott, MasterCard, and ITSE. Now, I don't know. I go to Marriott's at night, so and I don't buy stocks at night, so I don't know. Stocks making the biggest moves after hours: Netflix, CSX, and PPG. Now, I understand watching Netflix at night, even though I don't buy stocks at night, but I wouldn't be riding trains or painting my house during the day. So I don't understand that part. 70 billion takeover deal as Amazon plans to buy Activision Blizzard. You know, I try to stay away from blizzards, even if I had 70. Federal Reserve releases 40-page document about the digital dollar, but takes no positions. It's kind of like politicians, all that talk and no action. And here's the best one. Tudor portfolio manager describes where she's finding alpha in the tech sector with rising rates. Now that's really interesting bedtime reading. Never mind. Let's move on to something that's more understandable. Okay, so in the news, we do have former President Trump blasting fellow Republicans who don't admit they've had vaccine booster shots, calling them gutless. On the other hand, Florida Governor Ron DeSantis, the world's medical expert, widely seen as a possible rival for 2024, recently refused to answer whether or not he'd been boosted. British doctors treating men who've had COVID reported that the virus sometimes damages blood vessels in the male organ, causing impotence and a permanent reduction in its size. That's scary. North Korea launches a campaign to pressure citizens to produce more human and animal poop for fertilizing crops. North Koreans who fail to meet their manure quota will be fined and not allowed into public food markets. Why would I want somebody that's pooping in a food market anyway? And pity the poor guy that has to monitor this whole thing. Norwegian military announced that due to shortages, soldiers must turn in underwear issued during their mandatory military service so that it can be recycled to new conscripts. Oh, geez, I assume it's washed. Oh, a team of British historians and archaeologists conclude from a study of bones that the medieval war horses ridden by knights into battle were the size of modern day ponies, with the great majority less than 4'10". There are very few that are the sort of size portrayed in a film, said researchers. British surgeon Simon Bromhall was banned from practicing medicine for branding his initials on livers he had just transplanted. Bromhall has admitted doing the branding, which he called stupid and entirely wrong. Oh, South Korean presidential candidate Lee Jae-myung has secured the support of many bald voters by pledging that if elected in March, his administration will require the national health plan to cover hair regrowth treatments. He, who has a full head of hair himself, supports greater public spending and has said he aspires to be a successful Bernie Sanders for South Korea. Let's see what else. I think that's bad. At least 57 people who took some part in the January 6th attempt to overturn the election are currently running for elected offices. That's scary, including some who breached the Capitol and faced criminal charges. More than 24 are running for Congress, state legislatures, or other statewide office. At least 5 are running for governor. Well, let's move on. Life is short. When one door closes, another door opens. You're probably in prison. To me, drink responsibly means don't spill it. The older I get, the earlier it gets late. And I say the other day, I could be referring to any time between yesterday and 20 years ago. I still remember being able to get up without making sound effects. I've had my patience tested. I'm negative. Remember, if you lose a sock in the dryer, it comes back as a Tupperware lid that doesn't fit any of your containers. If you're sitting in public and a stranger takes the seat next to you, just stare straight ahead and say, "Did you bring the money?" When you ask me what I'm doing today and I say nothing, it does not mean I am free. It means I am doing nothing. I hate it when a couple argues in public and I miss the beginning and don't know whose side I'm on. When I ask for directions, please don't use words like east. Sometimes someone unexpected comes into your life out of nowhere, makes your heart race and changes you forever. We call those people cops. Okay, an old blind Marine wanders into an all-girl biker bar by mistake. He finds his way to a bar stool and orders a shot of Jack Daniels. After sitting there for a while, he yells to the bartender, "Hey, you want to hear a blonde joke?" The bar immediately falls absolutely silent. In a very deep, husky voice, the woman next to him says, "Before you tell that joke, I think it's only fair, given that you are blind, that you should know 5 things. The bartender is a blonde girl with a baseball bat. The bouncer is a blonde girl. I'm a 6 foot tall, 175-pound blonde woman with a black belt in karate. The woman sitting next to me is blonde and a professional weightlifter. The lady to your left is blonde and a professional wrestler. Now think about it seriously. Do you still want to tell that blonde joke?" The blind Marine thinks for a second, shakes his head and mutters, "No, not if I'm going to have to explain it 5 times. Okay. Brandon Howe, 19th of January, birthday. Pete Bales, 19th of January, no, 22nd of January, birthday. Mike Lafino, anybody seen Mike Lafino recently? It's probably in Florida. He had a birthday, has a birthday on the 23rd. Shannon Graham and his what is this? Oh, Sharon Gundel, James Gundel's partner, otherwise known as the wife, has a birthday on the 22nd, right?
You bet.
Okay, you've got big plans for that.
Absolutely.
Okay.
You better.
Phil Sparks. I haven't seen Phil Sparks for a long time, but on the 1st of January, 1989, he joined the club. Phil, where are you? Yeah, congratulations. So that's 33 years. Denny Jarvie, on the 18th of January, had celebrates 20 years in the club. And Jody Sperber on the 22nd celebrates 6 years in the club. On the 18th of January, Nate Heister and Jerry Pfeiffer had wedding anniversaries. Is that right, Jerry? I saw you. Did you have are you going to have a nice celebration? Oh, you had a nice celebration. Okay, that's great. Okay, so that's the end of the sergeant's report, but here are the fines. If you have ever worn military issued underwear, that's $1. If you ever rode a 4 foot 10 inch pony, that's $1. If you've ever branded your initials on a liver, that's $1. If you ever use hair growth treatments, that's $1. If you have not gotten vaccination or gotten a vaccination booster, that's $1 for sure. And if you're not wearing your pin, that's $1. And with that, Mr. President, I will turn the microphone over to you for the collection of Happy Bucks.
Thank you very much. All right, Happy Bucks. I'll go ahead and start out. I got a Happy Buck for my guest today, Adam Horseman, Dayton Rotarian. I met him a couple weeks ago at Dayton Rotary, so it was a good time. So you're from Beavercreek, or you live in Beavercreek?
Yeah.
And you're a board of directors at the chamber?
Correct.
So he doesn't know this, but my guest is actually a prospect for Beavercreek Rotary. So thank you for joining us. Anyone else? Eric, of course.
Okay, I have a Happy Buck because I've mentioned before, I'm in the Novavax
phase 3 vaccine trial. On Monday, I got to go to Cincinnati and get my booster shot. On Tuesday, I spent all day with the fever.
Yeah.
All right. Edie?
So today was my last day working at Hampton. I am moving Monday to still be with the same company with ARS. I'm going to be with the F-15 program, so it's a promotion.
Congratulations. Does this mean you have more time for Rotary?
Not initially.
Pete?
As the sergeant said, tomorrow is my birthday. This is my last day in my 40s. Today, we cut the ribbon for the new Nothing Bundt cakes in Beavercreek. And so I picked up 2 large cakes to celebrate tomorrow.
All right. That's for us, is what you're saying. Okay.
So as the sergeant pointed out, we had an anniversary on the 18th, and so I'm gonna drop $58 in the pot.
All right.
58 years of wedded bliss, more or less, and anyhow, and well, fine.
Congratulations. Anyone else? Of course, I love it.
I might as well say something. So this weekend is the Scout Fun Night. So I get to go camp out in 8-degree weather. No military underwear. That being said, the guys get to get up tomorrow morning and make pancakes for about 150 people. Up early, freezing.
Good luck.
A good time.
All right. Let's do the raffle. Winning ticket number.
Winning ticket number, just drawn by one of our guests, various guests, is 236-9534.
9534. All right. Birthday. Birthday boy.
Birthday.
Take it out.
Drawing for the ninth club,
You just wait a minute. Yeah.
$402 in the pot. Yeah, sorry.
Hot Rose. All right. Just a reminder, half the proceeds go to our annual Christmas basket. All right, let's move on with the program here. Our speaker doesn't need an introduction, but I will introduce him anyway. So Barry James, he's the CEO of James Investment Research and the president of James Advantage Funds. He received his undergraduate degree from the United States Air Force Academy, his master's degree at Boston University. He joined James Investment Research in its beginning years before a tour of duty as an instructor and fighter pilot with, of course, the Air Force. And he returned to the company in 1986, the year I was born. Sorry about that. Barry currently oversees the management of James Investment Research and is the senior member of the firm's investment committee. As a company spokesman, he makes frequent national television appearance on NBC, Market Watch, Fox Business, and Bloomberg TV, as well as being quoted in the Barron's Wall Street Journal for numerous other financial publications. So with further ado, one of my favorite speakers, James.
So great to see all of you again. You know, they bring me onto those programs, and that's because you should listen to an economist. And you know the reason why? Because they're as likely to be right as anybody else. Or as a friend said, you know, God made economists to make weathermen look good. All of which is true. Anyway, it is wonderful to see you folks. I'll be talking about the economy, and then I have Dr. Falanina. He retired from out at Wright State, even though they can't keep him away. And he's our Deputy Director of Research. He'll be talking about investments, what you folks really want to hear about, I know. I also have with me two of our guests, two of our newest folks in the firm. I have Beth Handwerker. She's estate and financial planning. and then have Ashley Walton, who is a senior financial planner with our firm. So we're adding some different bits and pieces to our firm, and I don't want to call them bits and pieces, but as we look at there we go, at where we are, let's just be upfront, okay? Where are we? And this is where we will take the whole program from. You see a cycle here, this sinusoidal graph, where you come out of a recession and then you come up to a peak area and then things start to go into the middle. Well, we had the recession, of course, we know, in 2020. We had a nice recovery in 2021, and we're in the middle of this, okay? So we're not in recession, we're not going into recession, we're not near a recession, we're just right in the middle of things. And when that happens, you start to see profits, the growth in the profits get smaller and smaller. And that's what we're starting to see. But you still see a lot of credit growth. The individuals out there in the world, the consumers, are spending, and they're starting to not just save money, they're starting to spend it and borrow. And then we see the inventory and sales growth, which we've seen. Now, I used this illustration yesterday. It was on CNBC. This is, I call this Hong in Chinese mythology. It's a two-headed dragon. It's a rainbow dragon. And there's two heads on this because that's what we're facing today when it comes to the economy. And when we look at that, we have the major drivers are the virus and the Federal Reserve. I know that seems overly simplistic, but that really is the key drivers today in the economy. Now, the first part of it, the virus, of course, we have Omicron. It's peaked in a lot of countries. And we've also found that it's peaked in some places like New York City and even Boston. They measure the water, they measure the COVID in the water, and it had gone way up, and now it's coming back down again. So nonetheless, it's more transmissible, but we haven't seen that massive increase in deaths like we saw with the initial waves of COVID. So the only problem that may be out there is we have a different variant that is deadly. That's not generally the way these things go. We look back at the Spanish flu, 3 waves, and the 3rd wave was much less than anything, and then it kind of faded. This is our, I guess, our 4th wave, if you will. The other driver is the Federal Reserve and their policies, and they're becoming more hawkish. And we all know the reason why. We drive by the gas pump, or we go to the grocery store, and if we can find it, the price is way up from what it was. So, you know, that's the old inflation. So they talk about tapering, raising rates, and maybe even reducing the size of what they have borrowed. So let's kind of dig into this a little bit. This is a chart that shows the cases in red, hospitalizations in yellow, and deaths in the blue. And so we had this massive increase, and it's hit all around here too. I've had, you know, a number of folks in my office have gotten it, and all of you have known somebody that's had it. And I even know one person that's had it twice, Omicron twice. So the thing goes around, but it didn't put them in the hospital. So that's, I guess, the only good news about that. When we think about that, and I just want to make clear, the economy is greatly affected by whether we open or close. They found that closing doesn't work over in Europe. In fact, in England, and I think it's the beginning of February, they're taking away everything. They're going to no mandates, no vaccine mandates, no nothing. You just go about living. Now, if you get sick, go home. But that's, you know, we have learned to live with it. We the people, not we the people in Washington. But we have learned how to live with it, and we will, and we'll be okay. Now let's get into the Federal Reserve. I want to spend some time talking about the Federal Reserve. They have 2 purposes in life, and one of those is to see that we have maximum employment. So generally speaking, maximum employment is seen 2 ways. One is the number of people who are employed as a percentage of the population. And we are not back yet to pre-COVID levels of employment. we're about 3 million short, but we should get there probably by mid-year. The other is, of course, the unemployment rate. And as we dip below 4%, you would say that that's pretty doggone close to full employment. So the Fed then starts to look at the other thing, which is stable prices, maximum employment, stable prices. And of course, we've seen inflation, and it's gone from just a few items to, I think, about 80% of the items that they measure in the consumer price index are, running above 5-year levels that they've seen before. And of course, we do have the bottlenecks. So if we look at stable prices, the blue line is what producers are paying, the increase in the prices that they're paying, and the greenish line is what we, the consumers, are paying. And you can see they're both just have taken, just gone straight up. As is usually the case, you would think that it's money supply. I know I've talked about it many times. That money supply is, too much money chasing too few goods. Well, it's not really the same this time, because this is more supply side, because we don't have the goods available. The prices are going up. People do have more money in their pockets. In fact, we have the greatest wealth we've ever had. The household net worth is the greatest that it's ever been in this country. And that in and of itself is powerful, positive for our economy, because people have money, they can spend it, and they are starting to spend it once again. They want to go out. But prices are up, and the Federal Reserve is no longer saying this is transitory. So when they took that word out of their lexicon, they're getting serious, okay? And that's what we have to watch for. Now, one of the key ingredients in the ongoing inflation would be wages. Now, wages have not kept up with inflation. So even though people are making more money, they're not making more money that they can actually spend, okay? To buy more in that sense. But it is a nice rebound. And the really good news about this, it's the people on the lower end of the wage scale are seeing the biggest jump in their wages. So that's a real positive. And if you remember, maybe a couple of years back, we talked about it, that when there are major tax cuts, that is one of the key benefits. The people on the low end get an acceleration in their pay. And that did prove to be true. So we have above average inflation. We have wage growth that could be spiraling. Raw materials. Now, this is what's interesting. The commodity, the CRP index, which measures commodities, just hit an all-time high. Industrial materials just hit a high. So those input costs will be filtering down to you and me in this room. You saw that with the producer prices. The companies have to pass along those higher costs eventually, wherever they can. And we know who's going to pay that. So we do still have a lot of pent-up demand. And then the things that would maybe stop it from getting run away, the technological advances, the automation. I mean, you go to a McDonald's, it's more machine than people, there anymore. And you've heard about the job interview situation there. They have just one question. What size uniform do you wear? I have a friend that oversees several, and he said that's surprisingly pretty true. But we have an aging demographic, which tends to dampen some of the spending, lots of globalization. And people, if you look at the expectations over the next 10, 30 years, the markets say 2 to 2.5% inflation. That's what it's reading today. So that's what we believe, that it's not going to stay way up there in spite of everything else. And those stability parts of the equation, I think, are important to keep in mind. And if we do look at it from unemployment here, we see the unemployment rate, that blue line, way up during COVID, way back down, just about where it was. But what you don't see here, the green line, is the percentage of people that are available to work, that could be working, that are working. And we had a major move of people retiring. I had a friend worked out at the base. He did not want the vaccine, and he retired. Now he got COVID and he wound up in the hospital. So the vaccine works, and that was really scary. He's getting better. But nonetheless, a lot of people that did that, and a lot of other reasons. People don't want to go to work because somebody else may have it, and they don't want to pick it up if they can at all avoid that. We've had a lot of people, say, well, we've managed to survive with just one of us working. So maybe we both don't need to work. And so you've had kind of a movement out of the labor force that way as well. So all of those things with the labor market near full employment, though, that's a real positive for the economy. And, people have a paycheck. That's very good for the economy. The consumer drives our economy. Consumer drives. So this is a chart of expectations. It's a futures number. It's a game, but it's what the odds are of how many times the Federal Reserve will raise rates this year. Now, it just went, it was at 3, and just at the end of the year, it jumped to 4. And when it jumped to 4, the stock market said, PU, this stinks. And what have we seen since then? Market went down. It's afraid. It's very afraid. Now, Paul will talk more about this and the impact on the stock market. But this is the thing that's in investors' mind. Up to this point, very low interest rates. Just a quick explanation. When you look at these companies, Amazons of the world, they have these valuations that are maybe seem crazy high. But what they do is they look way in the future and say they're going to have such great earnings. And then they figure out, well, what are those earnings worth today? They discount it back to today's value. And it's based on interest rates. So low interest rates, hey, you can have a high valuation, who cares? But if interest rates go up, guess what? That high valuation looks very risky. So people are trying to get their handle on this, and they're afraid that the Federal Reserve is going to make a mistake. But 3 or 4 is probably all they'll do. And Chairman Powell is a pretty good communicator, and he's not going to surprise the markets. That's the big thing. But see, the other side of this is we've had this thing called quantitative easing, where I think I've explained it before. The Federal Reserve has a credit card, never has to be paid. It's just great. You put on it, whatever you want. And so they've got $9 trillion. Now our government spends the money, goes into the marketplace to borrow the money, and then the Federal Reserve buys it. If that's a Ponzi scheme, I don't know. But they don't have to pay it back, but they are going to stop doing that, borrowing buying more bonds. And they're looking like they're just going to let that start to drift down again. Now, if they go wholesale and start to sell these, bonds, then that would, to lower their balance sheet, that would really cause some consternation. I don't think they're going to do that because it's an election year. Guess what? And he was just reappointed by President Biden. So we think we'll still have a strong economy, but it won't be growing as fast. We've got the consumer who's very resilient, and that's really good. We do have Fed hikes coming, and if you have money in the bank, well, you might be paid something other than nothing. And inflation should moderate by the end of the year. We're stuck with it for a while. It's not going anywhere. It's here for a while, but it likely will moderate. And the job market, which we all are thankful for, every one of us who has a job, should remain very, very strong. Now, to get to the real deal here, I'm going to ask Paul to come up, and he asked me to tell you this thing, Mark Twain quote. He said, "There's only 2 days that it's safe to invest in stocks." Now, you were talking about not investing at night, but there's 2 days, and they both start with S. You get that, the markets aren't open.
Thank you very much, Barry. Thank you, Barry, and good to see all the friends here. I haven't seen you guys in a long time. I was hiding. Actually, I was making money in the stock market. I know why you're here today. As Barry said, we are here to hear about investment and how to make money in this year. Let's see how you move this like that. All right. This has been a very resilient market over the last 3 years. If you look last year, the market made 28%, and the year before 16, the year before that 31%. All this was driven by strong economic growth, elevated earnings. All these companies are making huge profit, especially last year, and also buybacks. When company buy back their shares, they have a lot of cash on hand, they buy back their shares, and that's basically good for stock market. And even though all the sector has gone up, a couple of them have done really well last year. Energy and real estate, 54% and 46%. Those are very high numbers. Of course, energy was coming from where? Almost zero the year before, because everything collapsed. The worst last year were the utility sector, again, because of the talk about interest rate going up, and also because of interest rate rising, hurt utility usually in general. And those also were the two that won last year were the biggest lag of the year before. That's rotation that you see most of the time in the market. What you saw also last year at the beginning of the year, value run. Value mean stock that have low price to earning, low price to book value. But in the end, the large mega cap, especially in the tech area, were the leader last year. Small stock didn't do well. That's basically what's happened last year, and also most of last year risk was on. Probably heard all these acronyms in Wall Street where they talk about FOMO, the fear of missing out, where you are afraid that you're going to miss the next one in the bull market. The TINA, there is nothing except stock market, because the bond market wasn't doing well. Everybody was piling into it, and a lot of people were buying the dip. Every time the stock market goes down, they buy it. And last year we have 77 times the SP 500 went up to the top. Reached the top last year. The pandemic stock haven't done well. The stay-at-home type, the Zoom and Peloton and all those haven't done really well lately. Now, since the beginning of the year, the NASDAQ, which is tech companies, has gone down by 10% below its November peak. And the SP 500 today is around 5% below its peak that was reached at the beginning of the peak. And this is driven by earnings, because at the end of the day, the thing that drives stock price is earnings. Okay. People buy company because they generate profit. And very important when you value a company is to look at how much profit they are making, or they're going to go and make in the future. For example, JP Morgan last week announced its earnings and the price went way down because of wages. The cost went way up, the profit went down. How much do you think Jamie Dimon makes?
Too much.
$34.5 million, and last year he got a raise of $3 million. But that was an average raise because the people in the firm, the average raise at this investment banker was 9.5%. Part of it comes from the fact that over the year, they got the wage pegged to inflation, and inflation has been around 2%. But last year it was at 7%. Then they got a raise, and that's 3 times how much they are bringing revenue. And when you can see that type of wages increase, that's why the price of the stock went down, because revenue, as I said, earning going to play a role. And you can see that these are the expectations for earning growth for 2020. A lot less than 2021, but still high by historical average. In both the top line, which is revenue growth, and bottom line, which is the earning, are going to be rising, but not as high as last year. And that's why the stock market is not going to do as well as last year. Besides what Barry talked about, the increase in interest rate, which is bad for companies, especially tech companies, that have their future earning far in the future. Now, people worried about, as Barry said, what's the Fed going to do? This is what's happened in 2013. Bernanke was the chair of the Fed at the time. And in a hearing in Congress, he said, we're going to stop buying bonds. And the market just went down. Powell is different. One of his doctrine is to make sure he doesn't surprise the market. That's why for the last 6-7 months, he was saying, we're going to increase interest rate, we're going to do this, we're going to do that. And he is more of a better communicator, as Barry said, than the other one. And he's going to tell us next Wednesday what's really going to happen. What you see today, the volatility that you see in the market today, is people guessing what he's going to say Wednesday. And one guru one day said, oh, they're going to raise rate by 5%. The market goes down. Another guru said on TV, no, it's going to take 2%. Then the market, that's what you see the gyration. But watch Wednesday or Thursday when they come out with what they're going to do. They usually do a good job at telegraphing what they're going to do. The Powell doctrine is really a good doctrine because it tells the markets what's really the Fed going to do over the next few months. Now, what we are expecting is that we think that the virus, we don't know, but we hope the virus is going to be slowing down or be part, as Barry said, in the normal life. People are going to see it as a booster every year. And maybe people will live with it like they are doing in England. The opposite of what China is doing. China is doing a zero tolerance policy. If you have one person in this room get COVID, nobody will leave the room for 10 days. That's what's happened at Disney in Shanghai. When one person got it, the whole 10,000 people that were in the park couldn't leave. And that's zero. That's also exacerbating these bottlenecks that Barry was talking about, because they can lock down a whole city, a whole port. And that's hopefully that will end by their Olympic. They have Olympic in February. And by the end of that, they were afraid that they have big infection rate during the Olympic. And hopefully by the end of the Olympic, they may change that policy. Anyway, what's happened usually when the economy open up, cyclical sector do well. As you can see from here, you can see when that ratio is going up, technology is outperforming. When it's going down, energy is cyclical stock. Cyclical means when the economy open up, the cyclical stock like industrial, material, financial should do well. We expect them to do well because we think there will be an economic opening after this virus slowdown. What Barry told you about them testing water, that's wastewater. He didn't want to say the wastewater, but that's what they were testing. And the number were down. The peak was January 1st in Boston, where they were testing the wastewater for the virus. And you can see it in New York. And for example, what you saw in England is usually 3 weeks ahead of us in terms of the virus. And in South Africa, it should go like this and then it go down. And hopefully that's what's going to happen this time. If that is the case, we are expecting that the economy going to open up, cyclical sector should do better. Cyclical means industrial, material, energy, and financial. And now, if we look at what's happened last time, this is what's happened during the first reopening. The first reopening started in November 6th, 2000. Pfizer came up with a vaccine, and that's what really started the whole reopening. That's where all the cyclical stocks are going up. Energy, financial, material, all of them start going up. That's called the first reopening. And you can see there what's happened. These companies have done well. Then came the Delta variant. The Delta variant started around March, April of last year, ended mid-September. During that also, all the cyclical stock went down. And then after that, start going up. And then by November 16, we start getting Omicron. And you can hopefully when this ends, we're going to have another cycle of reopening. And that is really good for this type of stocks. Now, what type of stock? You can see here in the first reopening, the small cap do well. Usually smaller company, when the economy is running, they do better than large company. When the economy is not doing well, large company have stronger balance sheet,
they can weather the recession, weather the bad economic better than small cap. We expect right now, because of the uncertainty, we are saying we should stay in both. But if the economy reopen, we should look into small cap, smaller companies, because these tend to do much better than the larger. We saw this in Delta. During Delta, the smaller company didn't do well. During the Delta period, it didn't do well. Large company did well. Conclusion, we say that the market is likely to advance with a lot more volatility. And that more volatility comes from, as Barry said, the virus and the Fed. Most likely the Fed now than the virus, and especially the inflation part. Okay. Now, you all probably were here 40 years ago. What's happened with Volcker when he started to stamp out inflation and what's happening. I was sitting at the table and somebody said, Barry joined the firm in 1986 when he was born. The other day we were at the conference and there was a guy from that I knew for a long time ago. He said, I wrote a paper with you in 1987. And actually said, I'm not going to tell you what the year I was born. It's probably born. It's probably the late 90s, you know. Anyway, start conclusion, above average earning this year. We think the earning going to be higher, even though so far 78% of the company have reported in the SP 500 are beating their average, but not as high as last time. We expect earning to be slower than earning growth to be slower than last year, but be above average. We are looking for companies that have pricing power. What Barry showed you earlier was the CPI, which is the Consumer Price Index, but he also showed you the Producer Price Index. The difference between those two, guess what? You're going to pay it. But if a company has pricing power means I can basically send you that difference. That means I can charge you more if inflation go up. Then those companies are going to do well. Okay. You're going to buy an Apple iPhone, regardless of what's happened, because they have that pricing power. Okay. But if you look at the product that you buy every day, it has a lot of people selling it. Those people are not going to have that pricing power. We're looking for companies that have those pricing power, and that can be measured by gross margin over a period of time. We're going to favor large over small until the reopening happening, because in time of uncertainty, you should be a large company, not smaller one. Balance between value and growth, but we are tilting more towards cyclical because we think an opening is coming, and we always avoid low quality stocks. Companies that have a lot of debt usually are low quality. Companies that have a lot of variability in their earnings, these are usually low quality stocks. And that's, thank you very much. If you have any question, you ask Bear. Yes.
Well, I have a question about inflation.
Yes.
It appears that inflation isn't just in the US, but it's pretty much spreading, it's pretty much worldwide. So what kinds of steps can we take in our country to mitigate that? Because if other countries have high inflation rates as well, isn't that going to affect us negatively?
Well, the transmission of inflation from overseas comes through the dollars. Let me explain that. Last summer, from mid-May to January, the dollars went way up because people were saying interest rate is going to go higher in the US. Interest rate is almost zero in Europe. People bring their money here to make more money. Now, when people start saying inflation is going to be too high here, inflation is not good for the dollars. Okay, because the value of the dollar is going to go down if the inflation is high. Now, the market is looking at two things. Is the interest rate going to be high enough to compensate me for the inflation that's going to happen in the US? That's why they are not coming. The bad thing about this is if you have a weak dollar, the dollar goes down, all right? The price of import is going to be high. That's inflation. See what I mean? Because
if the dollar is low here, if you're gonna buy a product from overseas, you're gonna pay more of it, all right? And if you pay more of it, that's basically an inflation. Anytime the dollars go down and your imports stay the same, you are putting more dollars out, and that's an inflation part of it. Now, it's true that the inflation is going up everywhere except in China. Okay, every other country has high inflation. For example, UK has now 5%, which is the highest in 30 years. But a lot of people expect this to go down over the next few months. And the reason is these bottlenecks are going to ease. Okay, this chip manufacturing is up. You heard today that's Intel going to build a $40 billion plant in Ohio.
Yeah.
Okay, you can see all these going to ease up over the next 6 to 9 months. A lot of people think inflation is not going to be that high, and that's what you see in the bond market. As Barry said, 10 years, 15 years, people are pricing an inflation rate of 2 to 3%. I think more people will come back to the labor force if the virus go down, and that will lower the wage pressure that we have now. China will move out of its $0 policy, and that will create less bottleneck. And we don't think the inflation is going to be that high over the next 2 years or 3 years. I hope that wasn't a long answer.
What about the world geopolitical situation with Russia's potential incursion into Ukraine? Do you think that's going to affect the economy and the market?
I don't know, but it's probably going to have it all depends on how they do it, what's the incursion, what's the response for what the US and the NATO people, when NATO crowd going to react to it. The issue is really simple. The Russians don't want NATO next door to them.
Right.
Okay. And the US and its ally are saying, we are not going to tell the Ukrainian what do they want. What they want for security reasons. They say if they want to have NATO here, they should have NATO. Okay. And I don't know how the market will react to an invasion. Usually what's happened most of the time is the market will go down and then reassess and will say it will go up. But I'm not sure they will invade. They will destabilize, try to destabilize the country, but they may not go that far. Again, you're talking about Putin, you should never say, I know what's going to happen.
That's true.
That's true, yes.
What percentage of your portfolio should be international stocks, and do international stocks ever perform as well as the United States?
Our target is around 10%. That we have now as a, okay, now international, somebody said Brazil will have a bright future, but always will. The international market, we always say it's going to do well because it has low valuation, it should do well. But last year it haven't, over the last 10 years haven't. But if you look today at the valuation of Europe, it's very cheap. All the stock there, the valuation of the emerging market is very cheap, but they never can get their act together to do it. But there are some bright spots. Last year, what do you think the best country in terms of stock market was? France. The worst country was China. And sometime, you know, some of them will do well. Our outlook is they should do well, and we have around 10%. And that's a little bit higher maybe than the index, but that's where we're at.
So Barry had talked about the 3 tools the Fed uses to control inflation and tighten monetary policy. And my understanding is they typically deploy those over a period of time as opposed to over a more measured approach, as opposed to doing it all at once. What's the likelihood as, you know, they deploy this too fast, right? They taper, they raise rates, potentially reduce the balance sheet. What's the likelihood that the Fed actually does those things as it may cause unintended consequences or more of a consequence in there?
This is a hard question.
2018 is, I think, Chairman Powell's test of fire. And he raised rates very rapidly and the market collapsed. He is not going to make the same mistake twice. The other side of that is, as he is looking at the future, he has to have something that gives the bond market and all the markets confidence that we are going to take care of inflation, but we're not going to take the punch bowl away. So in all probability, it will be very, very slow. Now, the speed is the key, is the killer. We look back like, I don't know, 8, 10 times that they raise rates. The stock market usually goes up when they start raising rates, like 7 out of 10 times or so. But the times it doesn't go up, they raise it very rapidly. He's not going to do that, I don't think. I mean,
Do you think it's likely there's a lot of tough talk now about inflation?
a lot of
Needs to
tough
do
talk,
something?
and they're going to signal well in advance so the markets know. Nobody knows today. When it jumped, when the expectations jumped from 3 rates to 4, and you're hearing 6 and 10, all these crazy numbers, it's no wonder the stock market is jumping all over. Expect volatility and then use the volatility to your benefit. But this isn't going to be a nice little smooth ride this year. I hope that was somehow.
It was.
Yeah.
Barry, if there's some post-COVID pushback against China and their supply of goods and services and buy American kind of movement, how would that impact the economy?
Well, in talking with manufacturers, their bottleneck isn't what's coming from overseas. Their bottleneck is coming from suppliers in the United States because they do not have enough people to produce what they need. So I think that's, it's like the snake eating something, it's moving down. And that's where we are today. We've got to get people back into our workforce. And if we can do that, then yes, we can handle that. We can produce all we need here in the United States. And I think there will be a lot of pushback against China. And that's one of the reasons we're not favoring it at this point in time. But if they do open back up, then everything could change all over again. Yes, sir.
So Barry, as your statement says here, if you have new money to put into fixed instruments, you would highly recommend short duration or floating rates. Is that accurate?
That's very accurate. I said yesterday on CNBC that if I had cash that I needed to deploy, I'd put it in a 2-year treasury. I know it sounds crazy, but the treasury yields have gone up and you get this stunning amount of 1% interest at 2 years. But the thing that's beautiful about that, even though it may fluctuate a bit as rates go higher, there's this pull to par. You're going to get your money back with your interest. So having something in that short, and then it gives you the option, you can sell it whenever you want if there is an opportunity to move into something else. But yes, on the fixed income side, for right now, keep it short because we're probably going to see higher rates this year as it ripples through. But that'll eventually, I think, come to a halt as well.
How do you feel about I bonds for the individual investor?
They've become a lot more popular, and sometimes when things are too popular, it's maybe a little late. But overall, I'd say there's nothing wrong with them. Nothing wrong with them. Would you agree with that, Paul? No. Okay. Well, very good. Well, thank you. It's so good to see all of you.
Thank you again. Always look forward to this meeting. I'll have to give you my bank account number and you can just do this all for me. Anything else for the good of the club? Eric, you good? Oh, yes. Per tradition, you probably have 20 of these at the library, but here's 21. It is the STEAM team explains. So it's science, technology, engineering, art, and math. So this will be donated under your name at the library. Thank you. All right, let's stand for the pledge. Would you like to lead us?
Sure.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Very good.